Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain globally. And today I have, well, you guessed it, I say it all the time, but it's true. I have another amazing guest. Today I have George Worrell. He is the co-founder and CPO at Blubird. George, welcome to the show.
Thanks. Hey, welcome. Thank you. Thank you so much, Joel.
You're very welcome. I'm looking forward to speaking with you today, and this is going to be great. So
Absolutely.
let's kick things off. And I'll ask you first, what is your background, and is it a logical background for what you're doing now?
Yeah, it's actually pretty logical. I spent roughly the last 2 decades building product and platforms that kind of sit at the intersection of finance, technology, and user experience. And so when you look at it from enterprise and fintech to Web3, decentralized governance, I've worked with startups and with Fortune 500. So I have my background is big finance. So think Morgan Stanley, Wells Fargo, payments companies like the backbone rails for PayPal, things like that. So leading strategy and product execution for that. So at Blubird, that kind of translates into taking what we have as a complex tokenization structure and compliance structure and kind of synthesizing it into a usable model. And so think institutional grade systems, and my role around that is making them intuitive, easy to use, and kind of front running the product strategy for that.
I can see that working at startups, working in enterprises like the Morgan Stanleys of the world might be a little different, I think. But I want to find out, what's it all about, including your focus, your expertise, and then
Sure.
what's the difference between how you're able to get traction in startups versus enterprises?
Absolutely. Again, yeah. You kind of cut your teeth over in the institutional or the corporate side of the world, right? A lot of us do. It's what brought us all into the system, into the industry, and ultimately fed into from Web 2 to Web 3. When you kind of relate that back to Bluebird and the nuances and the differences and pieces like that, for us, it's building things that are similar, like you'll hear similar words like infrastructure and compliance, and we kind of apply that to our own layers, our own tokenization from a compliance structure. So basically empowering founders and investors and institutions to issue and manage real world assets or digital assets in a regulated and auditable way. One of the key differences is you mentioned startup is that we're able to move at a much more nimble pace and speed than we'll say a corporate environment, which typically tends to be bureaucracy laden, slow, hard to adopt and pivoting on systems that are just old and over and over and over again. So it's kind of this waterfall mentality, tack it on, build it, versus what we are, which is a connective tissue and is modular and chain agnostic and across the board, just much more nimble and easier to move tactically.
And what kind of products are you helping to build? Or are you building?
So really, our products consist of right now five key pieces. So if you think, first of all, tokenomics models, right? So companies, whether that's Web 3 or whether it's Web 2 coming into Web 3, it's they all have to have tokenomics within their Web 3. So we have a product suite that covers tokenomic structures and construction that ultimately then feeds over to cap tables, which is have the tokenomics feed how you situate your investors, how you set up the deployment of those tokens. And so we have a deployment engine that mates to that. And then on the opposite side, we have an investor portal and claims engine, which allows people to invest in projects and also gain their distributions, all completely automated and modular, and those all fit together. And then on the other side of the house, we have an RWA suite, which is an asset creation tool that allows us to create chain agnostic digital assets that cross a myriad of things related to RWAs, whether that's precious metals, whether that's real estate, whether that's uh, other types of backed assets, pieces like that, and then mated with a marketplace that allows distribution of those assets. So one creates them and distributes them. The other one allows for tracking and transactions.
Got it. Got it. So I think I want to get into the RWA suite first. Um, I want to talk about, first, there's some aspects of tokenization that everybody talks about, and then there's an overlooked aspect to RWA tokenization, right?
Sure.
So what do you see as the overlooked aspect, and why is it overlooked?
So, you know, when you look at, what people talk about with RWAs and tokenization, it's all focused around the minting process. It's like, okay, well, we create these RWAs, these assets, they're on X chain, and here's the process to do that. That's not really the real work. It is a piece. Don't let me like make that smaller than it is, because that's the secret sauce. Also, at the same time, is a complex or a compliant structure that allows people to create RWA assets. But the biggest piece is what happens before and after that step. Things like onboarding investors compliantly, registering the assets correctly, managing the emissions, creating this claims and liquidity layer. Those things occur before and after, and they're all based off of proper governance and insurance of that governance. And so they're kind of not the sexy part. That's the part that gets ignored, but it's the difference between a pilot project and $1 billion kind of pipeline. But it's the most overlooked, right? So if you look and you distill down what a lot of people do, there's a lot of RWA platforms out there, and they're like, okay, well, we tokenize RWAs, and that's what they do. Then that's fine and well. But again, if you look at what bookends that particular piece and the knowledge that it takes around that, right? So we are not just a platform, but a level of or a group of um, subject matter knowledge experts at the same time, and that whether that's product governance, whatever that might be, those are the key pieces that are overlooked. They're the ones that are missed, and at the end of the day, those can be costly. They can create governmental issues. They can, so as far as that goes, and it's a huge gap. Like it's not a small feat, and not a lot of people are taking, and that's why a lot of people don't take it on, frankly.
Got it. I understand. Actually, I've talked to a number of people who've built RWA platforms. You're the first one I'm talking to that's talking about a compliant structure around those platforms, right? So
Yep.
I think that's important too. And I want to get a sense of what would be the best, most ideal compliance structure.
Well, that's a good question, but a lot of that does rely on jurisdiction. So each jurisdiction has different laws, different governances, pieces like that. So it is somewhat bespoke or a la carte in that respect. So you can create compliance off of, is everybody KYC and AML'd? Are they ensuring that they're good actors? From that perspective, right? So that's just a baseline. Um, and you can facilitate things like geofencing of asset distribution. Those are key pieces. But those are simple in their form, and those really operate around the interoperability, right? Again, going back to the infrastructure. That said, the real answer lies in what the governance pieces are, and do people understand that? So, for example, um, are there type of corporate structures that they have to maintain for compliance? It gets really deep really fast, and each place is different. So it's a little bit of a two-sided question. One, you can do basic, key, simple compliance which should be inherently built in. But then you start to step over into a territory that does require some bespoke services.
Right. So I want to get the distinction here. Um, RWA products of the future. What you say is everything's on a cart, but the RWA products of the future won't be built from scratch, right?
No.
So you got a hybrid approach. How's that gonna work?
So, when you look at the next generation of builders, they don't have time or capital to rebuild compliance and infrastructure. They're going to end up using these composable, pre-audited modules where they can plug in issuance, KYC, registry payments, and then kind of secondary trading as needed. And that's how the software is, matures kind of from this bespoke system to these modular interoperable infrastructure. So it's the only way to make tokenization repeatable and cost efficient at scale. So building from scratch is just kind of this old, I think this kind of older archaic model when someone's really looking for something that's more composable and structured to their needs. Really, is what it comes down to.
I see a lot of projects that built still in the crypto space. A lot of things are just built from scratch. It's how do you get past it? How do you like? Okay, we have these 8 or whatever 10 L1s that work really well. Just leverage it and then build upon it on that, right? So
Right. And for us, we did have to build from scratch because what we were with the exception of a few things like KYC, for example, right? There's other people out there doing that better, that build that module. So that's an example of us consuming a modular piece into our own system. But for what we were doing, it just didn't exist. So these deployment engines, these baselines of way your emissions are released, the way that you're interacting with your investors based off of your tokenomic structure. None of that existed. So that is net new, but the end result is down the line for our partners and clients, and that is they can use that composable system without having to recreate it. So we had to create it in order for it to become composable.
got it. You still see, and you're chain agnostic. So chain agnostic,
Mhm.
it's a feature, and already it's a feature, and your company claims they are non-negotiable. So why are they non-negotiable? Why is it more important to be chain agnostic than I guess maxi on one platform?
Well, I mean, it comes back down to the fact that you can't bet on a single chain. It's about interoperability, it's about trust. In some product platforms, it's about what type of assets are coming across different chains. How are those combined in a single source marketplace? I mean, you can start to see why we have approached this kind of chain agnostic design approach so that it ensures these issuers and investors can operate across ecosystems. That's the big key. So it doesn't matter whether it's Red Belly or Polygon or Sonium. That should be all without friction, which ultimately means chain agnostic. And they all also have to be audit ready, which means everything's from kind of the issuance to the claims need to be transparent and verifiable. And that's whether it's by regulators or custodians or auditors. And so it really comes down to being chain agnostic in a compliance driven market. Um, and they aren't really kind of nice to haves. They're kind of really required across the board. So that's why we took that approach. Is why we'll continue to take that approach. Is that they all have to play together, and it all comes back down to that keyword of interoperability.
Got it. Got it. So I want to get your grand vision here. Right now we have, I don't know, we have digital stocks, we have fractionalization on like Robinhood. I can go to Robinhood, I can buy a piece of it. Well, I can't buy them. My wife works in Wall Street, so I can't buy stocks. I don't want to buy stocks anyway. Yeah, I'm a crypto guy, but say everything's working, and everyone's tokenized. What do you vision? What's your vision on the breadth and the reach of the RWA market overall, and what things would be possible that aren't possible right now?
Well, I mean, the reach is extensive. Like it pretty much kind of encompasses most anything that you can think of based on, and then that's based off of and broken down by segment. And again, if you start to touch at the high pieces, is it precious metals? Is it real estate? Is it art? Is it, I mean, you really just kind of have to think about something. You're like, oh, well, we could do that. Is it paper-based backed assets? Or is it those particular key pieces? And so, with us, related to that, it really comes down to also not just being chain agnostic, but also being kind of asset agnostic as well. So that we can cross all those boundaries. But your question about the breadth of it, I mean, it could be anything that you can think of. I mean, we're talking to people about pretty much anything that you can think of, right? So we're talking with folks about a lot of in the energy space, in the metals space, which could be mining. Doesn't matter what that is. It's in off takes of that. It's in exploratory elements of that. Then it goes to like cooktop stoves in like Mongolia. I mean, we're all the way down to diamonds again, mines and the exploratory aspects of that. So, what we're seeing is a big push in that area, but those are very long tail approaches also. So we're dabbling in, and our model sits pretty square up in that space, but it's very knowledge intensive on top of the platform itself. And again, there's like I said, there's key pieces like real estate and other things. That's a whole slew of other things that come along with things like that as well. So
Yeah, I can see the long tail, especially when you said the Mongolian stovetops. So the thing is that a lot of people in crypto and blockchain don't have a long tail approach.
they don't. They don't.
How do we shift that mindset?
I think that mindset is shifted by the various levels of adoption and who is adopting that at this time, right? So it's not just about a meme market anymore. It's not just about kind of hedging plays on trading. It's when true utility enters the space, and it enters it at an institutional grade level. I think that's what you start to see. It's one of the things that we focus on is what does that particular space look like? Can someone start up a simple Web3 project and distribute tokens and create capital raise around that with our Launch OS product? They can, and that's a much different cycle. And that is really true Web3 adoption is still, if you think about it, product raising capital. People want to invest in it, whether you have speculators or actual backers. And that model, I think, is being adopted pretty well. Like that's out there, that's happening. That's it's starting to evolve across the board to a broader audience. But and that's one side of it, and we do cover that. The other side is the institutional side, which again goes back to that long tail approach, and the adoption there is slow. And it's slow because you are bringing in that layer of bureaucracy. You are bringing in that layer of institutional grade decision making, and that's not a bad thing. It's just it. Now, at the end of the day, both of them, mainstream adoption has to be when tokenization becomes invisible, and it doesn't matter who it's to. And that's really related to infrastructure and removing complexity, so that whether it's Web3 founder or an institution can focus on creating the value. That's really the unifying piece to it, bringing it back around to mass adoption is it doesn't matter what side it is, it's got to be invisible. And that's how it's going to continue to drive this adoption.
I agree with you. I agree. On the institutional side, I worked at AIG. I worked at AIG for 12 years.
Okay.
I worked at Prudential. I worked,
Yep.
insurance, and some of the systems that I used in 2005 and six. A lot of the big companies are using those systems today.
Oh, they are.
Yeah, they're like used like antiquated systems.
They are.
No,
Well, just a quick side story on that. I worked, like I said, I worked at Morgan. I worked in the fixed income division. I was in there documenting specifications for their entire trade flow, and that's whether it came when it came from the Blubird terminal all the way up to deal structure and execution, or the winding up of the deal, and also the converse side of unwinding a deal as needed as well. And there's a story about the spreadsheet that exists on Wall Street. That all the calculations come from, that all the deal structures come from, and it's real. I mean, it's true. I mean, I saw what they were doing, and you were talking about making major financial points of decision on a spreadsheet that fits on the side, on a 10 by 20-foot wall. Like, not like, I mean, it's just huge piece. Yeah, I could go on forever about the again, back to that kind of like that archaic model in traditional finance, which still does exist, by the way.
yeah. So I'm just wondering if that archaic still exists and still perpetuates, which it has been. Why can't Main Street beat Wall Street in the RWA game?
That's a good one. I think when you look at the market in general, I think there's a lot happening there. It is. I mean, you have to go back to a greater question of what they're viewing the crypto or the blockchain space as a whole, right? Are they, you look at the all of the Bitcoin being scooped up, right? Or you look at the market manipulation, or you look at where we currently stand in the market. I mean, they're in there. They're just in there in different ways right now. And I think it's more related to how many of what assets they see store of value in, and then how are they consuming those assets first and foremost. And then then that's early stage entry. The RWA space also of interest. And when you look at it, it's more oriented around how can they create additional financial instruments that allow them to sell against. So there's two things that are happening. One, they're building reserves off of backed pieces like Bitcoin, Ethereum, pieces like that. The other side is the institutional instrument side, in which they're saying, hey, we need to increase and diversify our portfolio of offerings. And based off of that, that's where the RWA piece kind of, I think comes into play.
Yeah, everybody's looking at the adoption and holding of it, but the whole thing is inside institutions. Derivatives are much huger
They
than
are.
anything else. So I'm like, how do you RWA the derivatives?
Right.
And once you do, what can they do?
Exactly. So you're defining that next level of capital market. And that's what most people, again, it's interesting because we're a platform, obviously, with a bespoke service that helps bring subject matter knowledge and on doing just that, and understanding that. And it's interesting to see the conversations kind of unfold around that exact piece, right? It's like there's a big shift in what the capital markets could look like. And what is that comprised of, and then how do they make these composable offerings? I mean, it's an interesting piece to be in. It's for sure.
Yeah, I clean up the credit default swap. Help clean up the credit default swap mess in AIG. So hopefully we don't have another credit default swap mess.
Right. We're just in this weird experimentation kind of piece, right? Like, and they're moving from like experimentation to execution, and it's slow to adopt, for sure, but something is piquing a lot of interest. I will tell you, there's a lot out there.
Great. So that's the RWA side of the business. I want to thank you for exploring that with me, and I want to talk
Sure.
about the cap table part of the business. How's that all working? What's the next step in the evolution there?
Sure. So that's actually a pretty well baked product. we have currently live, we have the tokenomics cap table and deployment engine piece, as I mentioned earlier, out there live. That is a SaaS-based model that allows any Web3 project to that is in need of building their tokenomics and their cap table and their distribution structure to easily do that with a complete turnkey system. So they're not looking at a whole bunch of, we'll just say 10 different disparate systems. They're not looking at a development team, which for the deployment of the token, for example. What we've done is created this kind of composable model that allows them to actually do that all turnkey and at a fraction of the cost. So the SaaS model has its own license fees, but to give you an idea, a token audit alone, like if you're going down this path by yourself as a Web3 company, just the tokenomics, just the audit piece of your smart contracts can be north of 20 grand just for that one shot. Whereas with a SaaS model like what we have, that's all integrated. KYC is another one. So KYC is already integrated. And so there's a lot of key pieces in those systems that reduce cost and also time, right? So we're talking about if you had everything ready to go, I mean, you could make short order of that entire process. And then, like I said, we kind of make that up to our other side, which is the investor portal, which is where people can request allocations to the projects. And then the claims engine where they actually claim the distribution of those tokens. Again, it supports this turnkey end-to-end piece or system for that. So that's all out there, functional and working now with a client base that we're obviously we're building and growing our client base there, but it's a system that reduces time and money and knowledge, frankly.
Got it. Got it. I remember. And how have you seen the distributions or percentages change over time? Like when I came in the industry in 2017, the project spun up. It was like 80% go to the founders, and 20% go to you if you're lucky.
Right.
So now we have standardization. How's that changed and evolved?
It's across the board. There's no real standardization there. We're not seeing anything tilted that heavily. The other thing about tokenomics is there's also a lot of thought that pre-runs just putting the tokenomics piece in there. So there's a whole layer of conversation and complexity related to tokenomics alone. But on the side that we're seeing, and we've pre-baked in many things. So we know that there's team distributions. We know that there's families and friends or seed round or any type of thing that you can think of during the duration of that. And a lot of that's already pre-baked in for us that allows them to kind of spin up really quickly and get off the ground and running without a lot of knowledge. And we do a lot of hand holding within the system from an education perspective. We're also doing a lot of, again, very white glove service right now. And I imagine we'll continue to do that because, again, you're talking about stuff that can get fairly complex. And to a generalized Web3 project, they just need a little bit of help. And the idea is to mitigate that friction for them, because the last thing they need to be doing is focused on those pieces, which are necessary evils, but it will take them away from building. And that's the biggest thing. You guys build, we'll handle the rest on the system, and you don't have to worry about it. So take distribution, for example. If you're manually managing your distributions, I mean, think about that. You're managing 8 rounds of distributions across hundreds of investors, and you could just handle those emissions with an automated deployment contract or distribution contract, whether that, so that's what we're doing.
Great. So a lot of entrepreneurs, what I found, founders, They like to do the sexy things, but they don't like to do the boring things. But the boring things are the what's going to keep you in business.
Sure, and frankly, they shouldn't be. I mean, at the end of the day, they shouldn't. They shouldn't be, and they should be focusing on building their business and leveraging these composable um, layers of technology to do the rest.
I
Seems
agree. I agree.
like a pretty solid win to me,
It sounds like a really good win.
right?
So yeah, so awesome. So I want to thank you very much for speaking with me today about
Absolutely.
Blubird. And I have one last question. Really, it's how can people find out more information about you, about Blubird? How can they use your system? How become clients? How can they do that?
Sure. I mean, the simplest thing is to just hit us on the website, um, getblubird.com. And it's Blubird. So it's getblubird.com with no E. And they can approach me on LinkedIn. I'm extremely approachable. And or the CEO or really anybody at the company on LinkedIn or on X. They can locate us on X. I mean, we're again a highly approachable, reachable, and glad to have discussions. Whether they end up being a client or not. Part of us is about our client base. Obviously, the other part of us is about education and movement of the industry. And so, yeah, I mean, I think that those are probably the best ways to get to us, are those ways.
Awesome. Thank you very much for your time today.
Yeah, absolutely.